We are here today with VCs and investors, so it should be a really exciting talk. But we also have in our bits traditional investors and what I'd class as a modern investor. So maybe there's going to be a few excitements, a bit of arguments. I don't know. Let's see if you agree or disagree. So let's get started. Maybe I'll start here with Brian. Introduce yourself, tell everybody a little bit about yourself, and then we'll go down the panel.
Sure. My name is Brian Mehler. I work for Block.one and specifically on the initiative called HODL.vc. That is Block.one's initiative to put capital back into projects that are developing on the EOS.io platform, which is what we launched earlier this summer. My past experience is 12 years in private equity, doing investment and hands-on turnaround of assets.
Hi, everyone. I'm Edouard Gaussen. I work for White Star Capital. We're a transatlantic venture capital fund with offices in Montreal, New York, London, Paris, and now Tokyo as well. So we're sort of the first fund out there to invest from a single fund across the Atlantic, and our focus is to back companies on each side, but then help them scale on the other side. Come in sort of the Series A level when companies have enough traction and help them grow internationally. We invest about 30 to 40% of our capital into fintechs. Blockchain is a space that we're interested in amongst others, and yeah, I'm happy to be here today.
Hi guys, I'm Ivan Soto-Wright. I'm the founder and managing partner of HODL.vc. We focus only on cryptocurrency and blockchain investing. We're an entrepreneur-friendly fund, but also a venture development studio. We incubate and build our own ventures from scratch, as well as supporting exceptional founders in the space.
Hi everyone, I'm Aditya. People call me Addy for ease. We are basically a proprietary investment firm. We've done around 35 investments in the last year in private rounds and seed equity in blockchain space. We continue to look for new opportunities. We're doing at this current stage around 2 to 3 investments every single month. And we continue to get, find more exciting companies within the space. So please come and talk to us if you have any project.
Fantastic. Well, thank you, panel, for being here and joining us with this talk. I hope we'll have some hard questions for you, but let's start with the basics. Maybe, Ivan, you can tell us a little bit about what you invest in, what stage you go into a deal. Are you looking for a special deal?
Sure.
And maybe you can fall on that as well, Brian, after Ivan.
Yeah, so I'd say we're definitely in a more unique situation because we're actually seeding our fund, but predominantly I actually sat on the other side of the table as an entrepreneur, and I was really frustrated with the value that venture capital was providing. I think capital is becoming more commoditized, and really it's about what kind of value can you bring to a project. And we really thought critically about that. We've been building our own ventures internally, but we've also been helping other projects. So, for example, Census, which is probably on everyone's lanyard, we were actually responsible for building that product from inception. So we put up our own capital to help them actually develop the product. And that's how we envision ourselves, really helping founders get to their next milestone, whether it be a product launch, whether it be an ICO, whether it be an STO. And we invest our own capital to make sure that they get to that next milestone.
Yeah, so HODL.vc has a unique positioning. We don't do the direct investing ourselves. Instead, we have partner funds that are established across the world, led by different investment managers, where they are making the decisions on what investments or where to deploy capital for investments. We do that for a number of reasons. One, we get different specialties. So we have a fund in Germany called FinLab, which they specialize in fintech operations. So they are top of the game in that world. We also have a fund here in London called SVK Crypto, or with SVK Crypto that's running, and they're specializing in taking down a lot of the projects that are in London and across Europe. The team's really good on building the community. And we have another fund in New York and Hong Kong. So we've committed about 600 million so far to these funds, and they're actively investing. Things that we look for, one of our funds recently closed a deal for, or led a round of a $35 million round to invest in High Fidelity. That is virtual reality. So while it's not fintech, their poise is actually to build a financial side of it, we've trading the digital assets within the company. So the marketplace for trading digital assets is extremely high. We've seen that through the esports games and now in virtual reality games. So we're very proud of this fund for taking the lead and doing that investment. We also did one of our funds did an investment in a company called Everpedia, which is the largest encyclopedia online. They're moving their system to the blockchain partly for a number of reasons, and they're releasing a token from that. And we have been really glad to be part of that because we've been able to, on the Block.one side, help them integrate, develop their plan, and execute while the manager is able to make the decision. So we're actually be able to be a little hands-off on managing the money and rather building the technology and building the space.
Fantastic. Well, there you go, guys. You know what they're looking for if you're seeking VC funds. But actually, I'm going to pass this one down to Adi because Adi has invested in 35 blockchain projects, which is astounding, really, to have 35 projects behind him. He was also a traditional investor in equity and debt. So maybe, Adi, tell us, what sectors do you look at? And from an investor's point of view, what should I be looking out for in a blockchain project?
Okay, so I'll just give a brief background about how I fell into this rabbit hole. So I was doing typical venture capital style investing, and I came across a lot of tweets around blockchain in around 2013-14, and by background I'm a conservative lawyer, so I was very scared about Bitcoin at that point in time because all the press was around the nefarious activities that were going on around blockchain and Bitcoin. So I decided to start focusing on equity. So I made few investments. One of them happened to be Ripple in 2014 on the equity side. And then subsequently, in 2016, I had a one-on-one with one of the top consulting firms, blockchain consultant, a company called Gartner. And he was ruling out blockchain technology, and he was saying how ridiculous Ripple or Bitcoin or any of these companies are. But then one thing he mentioned was about Ethereum and about their meetup in Shanghai where 8,000 people turned up in 2016. And I was like, how is it possible that you're saying that it's all rubbish, but then you have all these developers turn up in China for something that's so new? And I knew that there was something going on. And then when 2017 happened, and you had Japan legalizing digital currencies, the first thing I did was just took the plane to New York, attended Consensus Conference, Token Summit, etc. And that was pretty much the start. I started investing. I knew from there on that this is a very immature technology, and the first thing that we need to look at is look at the infrastructure aspects of Web3, and there are problems around where you're going to store these tokens. So you need wallets, you need custody services, you need exchanges, you need scalable solutions. You need start investing into all of those aspects, starting with Omisego, Filecoin, Enigma. It's they're literally every single thing that I could find in early rounds, I ended up investing, and I still that's the same process that I've been doing. Unfortunately or fortunately, 85% of all the portfolio is in the US, 15% is in Asia. I've yet to close a deal in UK or in Europe. I've not found anything worthwhile, or probably from my perspective at least, to invest over here. Though I'm trying to find deals within UK itself. So I'm looking for teams that are in science with deep domain expertise in science or with deep mathematical backgrounds where people can genuinely create new protocols, where there's a chance that they can scale it, there's some proven science around it, and that's my investment thesis as of now.
Now, you mentioned there about the SEC, and you alluded to the SEC. Maybe, do you see the SEC as a good thing, a bad thing? Is regulation killing ICOs? Or what do you think about that?
So in the US, you can't, as in nobody in their right minds would want to do a proper crowd sale because you just get into trouble. So everybody's just going through accredited investors, and which I think it in a way defeats the whole purpose of doing an ICO in the first place, because ICOs, as if you would have read early commentary from Naval's 2013, 14 blogs, he talks about using IPOs for growing networks, and the exact opposite is happening, at least in the US, where you only allow accredited investors to come in, people who have to prove that they are worth at least $1 million or are earning $200,000 per annum, and that puts back most of the people to participate. Now the SEC, they have taken it's also about the lawyers. The lawyers are kind of scaring their clients, and people are not able to freely deal with the situation as it exists. And the solution that has come out is that you have a traditional VC funds or crypto funds who are basically replacing the crowds from investing into ICOs or token sales, as I would call it. I think that's the exact opposite of what was the original intention of having ICO. But we got to live with whatever that the law. Nobody wants to go to jail, and everybody needs to have lawyers on their side. And it's become an expensive process, and it means that you need to raise a lot more money because you need to have lawyers, you need to cover for all these conference costs, and I think it has in a way defeated the purpose of doing ICOs to some extent.
Yeah, I think to piggyback off of that, I think I think regulation is a great thing if it's done right in any sector, especially when you see the amount of scams that have happened in the ICO space. If you let the traditional non-sophisticated investor come into this asset class that's driven by a lot of amazing innovation, but I think the first sort of set of tokens that came out there were utility tokens, and you have to ask yourself how many of the investors that were buying utility tokens actually cared about the utility of the token, rather than speculating. And if the number is above just even 20-30%, you need to probably think about the fact that this is an asset class, and so if done the right way, of course, you don't want to kill the innovation, but I think it's good that it remains an institutional if it's in the prospect of investing.
I think it's interesting just to think about a little bit the history of the space. Even before crypto and blockchain kind of existed, it was really in its infancy. For me, what I found interesting was, as I'm American, it was very difficult to get equity early stage into a business. They had things like Kickstarter, Indiegogo, where I could participate in a project, but it was difficult for me to get an equity participation in those companies. Although in the UK, where the laws were a little bit different, investors could self-classify as being sophisticated, and you had platforms like Seedrs, platforms like Crowdcube, really start to take the market. Bank to the Future, which was really lucky because they focused on Bitcoin exclusively and blockchain investments, so they've done pretty well kind of backing every major blockchain company. But I think it's interesting if you look at it from that dynamic and then say, okay, what we've seen now is with ICOs, obviously a lot of these were utility tokens, completely unregulated. We kind of let people just play and see what happens. And obviously there's going to be scams. That's something that we have to make sure that we protect against. But I think really, the forward is really bright to me because I think security tokens, it's still very early and very nascent. Security tokens, I see a massive value of being able to get equity early, especially as a venture capital investor. It's very interesting because we're adding a dynamic of valuation and liquidity much earlier in a company's life cycle. So I think right now it's still to be kind of seen because we haven't really seen too many security token exchanges. And some of the drawbacks that you were mentioning was really because, I know it's very expensive to go through the process and get the Reg D, Reg S filing, or whatever's required to become a security token. But the reason why it feels like not a good cost benefit reward at this stage is there's no real liquidity across any of the exchanges because there's very few security token exchanges. But I think that will change. There are platforms like T0 that have raised pretty considerable amounts of financing. Some of the more regulated exchanges are now looking into crypto. I really think we're going to see the next boom. I know it's a depression right now in terms of some of the markets after the ICO craze, but I think security tokens really are the future, and we're just starting to figure out what kind of rights and how we're going to define what security tokens are going to actually look like and be the next kind of 6 to 12 months.
Fantastic. Well, one of the things people talk about in the crypto world, and certainly when you're investing, is the fact that you're investing to something that's really liquid. You're investing in a liquid asset. And I guess people might know this, but the average hold period for a token, when you've realized it from an ICO, is just 17 days. You know, not 3 or 5 years, 17 days.
Where did you get that set?
I read it on one of the Coin Idol, I believe. But the question I would ask then, are VCs excited because of this liquid asset, or are they not? I mean, is this liquidity a problem for a VC, or is it a good thing for a VC because you can liquidate the value you hold quite quickly? And I'm going to pass that actually to Ed, because White Star, whilst it's got a pedigree in FinTech, doesn't hold a blockchain project just as yet.
Yeah, we don't. Obviously, we looked at the ICO space a lot last year. It's first of all, it's a matter of having the ability of investing in tokens as part of your LPA. So that's you need to be able to put that in place. You know, looking at the space, you look at the past 12 to 18 months. It's quite certain that it requires a certain type of network and knowledge to successfully invest in the space and to make really good educated bets on that market. So I'm not saying that you absolutely need to build a separate team as a part of your venture capital fund. I mean, we just saw Andreessen doing that, and I think they're doing it the right way. But it's definitely a beast of its own. When it comes to liquidity, I think it's great. You talk to a lot of LPs, especially as a new fund, that there's always a question of liquidity. 5 to 10 years, it's a bit of a long time. So yeah, for sure, that's extremely attractive when you're a VC. And yeah, I mean, I think equity tokens, like the future of investing in blockchain, will be at the convergence of both.
And what do you think about that, Brian?
Yeah, so the space with ICOs is obviously like a gamble. There's a lot of risk. And while our mission is to build an ecosystem fund, so the 17-day hold of a token is not something we are looking for. We're looking for actually building projects, building ecosystems, and to relate it to the FinTech world, we have projects that are building services for banks and for those regulation environments where they actually want to have like long-term passion projects, not just passion projects, but long-term projects that are going to be building something that's going to be there for years to come. So typically the play is not for just tokens, it's for an equity stake, because our managers are experienced in building these platforms, coming from years of experience, whether it's in consulting or banking, and are actually putting forth the resources, not just capital, but personal resources and experience to deploy projects on a larger scale.
So one thing that people have been coining the current price of Bitcoin is we're in a kind of crypto winter, because it's been at a low stage for a period of months. Is it a time to buy? Is it a time to hold? Should we be optimistic about the prices in the future? Do we think it's a correction that maybe it's a good thing for the industry because it allows other coins to have some prominence?
That directed to me, or?
Any one of you can throw into that.
With regard to Bitcoin, I'm a big believer in Bitcoin. It's more than just a decentralized network. It's a cult. It's a religion. There are no rulers. There are only rules, and it's all mathematically driven. And I think there's never a bad time to buy Bitcoin. Maybe people bought Bitcoin at 18,000 and are kind of disappointed, but we may as well see the price at 100,000 next year. Who knows? So I would just think that I think it's a great store of value as a currency. Of course, in 2020, the rewards will halve, and which means that if Bitcoin has to continue, the price has to go up, because otherwise the miners may not be incentivized. Obviously, there's another issue around energy, but that too, I understand that there's a lot of investment going into green resources, where renewables are now taking over the mining of Bitcoin as well. So I'm always optimistic about Bitcoin. So just go and buy it.
I kind of
There you go.
Yeah, I kind of see Bitcoin as the gateway drug to cryptocurrencies. It kind of gets you into the space. But for me, I kind of look at it, I don't like to think of a particular token. I'm a bit token agnostic when I look at this industry. I think digital assets, cryptocurrencies, it's very interesting if you compare it to kind of the time of the dot-com boom. Obviously, that was a sector-specific focus. Here, you have a sector of companies emerging that are leveraging blockchain and cryptocurrencies in an interesting way, but cryptocurrencies are also a new asset class. And for me, what's really interesting is this market right now is dominated. It's about 85% retail to 15% institutional. And my prediction is that that will flip in time. And there have been some preventions from that actually happening. I think the barriers really come down to custodian. A lot of the kind of custody solutions aren't quite there yet. Which kind of makes institutions reluctant to actually invest in the space. But if you look at it just kind of macro level, the asset class, we hit about a 700 billion peak last year. We're now sitting around 250 billion. And if you compare that to other asset classes, just look at gold, for example. Gold is at 8 trillion. So if you look at it from that perspective, I think this industry has a long way to go. I'm agnostic as to what token is going to be the dominant token. I think it's really interesting that Bitcoin dominance has declined, and we've started to see other tokens come in to vie in terms of competitiveness. But I think Bitcoin will always kind of stay as it is still the most networked effects have kind of played into Bitcoin's popularity, and so it's still to be seen whether it'll be a lasting one. But I think for now, there's still definitely an opportunity, and that's why we're hodling on this space. We're thinking long term.
Thank you. Well, let's take a couple of the audience questions. So at the top there, we've got one from Mahal. Will ICOs eventually completely replace traditional equity funding? I'm going to pass that to you, Brian.
So I don't think it's going to completely replace. The reason for that is there's a lot of value from an investment manager, whether it's connections going to be made, guidance, skill set. When you are doing a typical ICO, you don't know who those holders are, and you're not able to gain a lot of the resources there. So I don't think it's going to completely replace. I think it's going to be a blended hybrid solution in the future.
Brilliant. Let's take a yes or no from the panel then, each of you. From Philip there, we have, will the price of altcoins at some point stop correlating with Bitcoin? So yes or no, Brian?
Don't think so.
How about you, Ed?
No, me neither.
Ivan?
Not in the short term.
Addy?
I don't think so.
So that's a solid no, I think. Not one yes there, which was a bit of a shame. Final question. We haven't got a name to this, but Bloomberg says over 50% of ICOs are dead after 4 months. Are ICOs the Snapchat of funding models? I'm going to give that to you, Ed.
So can you repeat the question?
Bloomberg say over 50% of ICOs are dead after 4 months. Are ICOs the Snapchat of funding models?
I don't think they are. Again, as regulation comes in and as we get more sophisticated about the space, and I think that 17 days holding model will obviously increase, and it won't be the snapshot of funding models anymore.
Well, we've actually got time for one more question. So this is a little bit of a personal one to myself, but let me just have a quick look at. What would you say, maybe in a few words, looking to the future, what do you hope for the space? Whether that's blockchain, Bitcoin, what's your hopes?
I think my hope is actually seeing the implementation of these projects into real world usage. Banks are talking about it, exchanges and hospitals, and governments are all talking about it. I actually want to see them go. I want them to be live. I want to see them run, and I want to see them grow over time.
Fantastic. And how about you, Ed?
It's hard to say something else than this answer, honestly. It's been all speculation so far. It'd be great to see some actual real-world applications and see it solve problems like a lot of other technologies do.
Ivan?
Yeah, no, just to follow on that point, I think most of the businesses that we've been involved in have an exchange-driven element, and obviously, as the market speculates, whether it's up or down, that's a business model that's going to work. But really, what I think is more interesting is these new decentralized business models. We have things like Facebook today, where we've kind of given all of our data to this large platform, and it's in the hands of a few people that are basically monetizing that entire value. A project like Census, which is a project we're working on, is trying to democratize that value a little bit more. Every piece of information that you give to these surveys, you're being rewarded with tokens. And I believe more and more models like this will propagate across a number of different industries. So excited for the new dApps.
And the final word with you, Adi.
Yeah, so I just believe that the whole purpose of blockchain and Bitcoin when it came up was like, creating more fairness in the society. So if we can move towards like, more equalization of income and wealth, I think then like I would say that yes, like, blockchains attain this purpose.
Fantastic. Well, I hope you'll all join me in a round of applause for the panel.
Thank you. Big round of applause for the panel. Thank you so much.